Hey folks, welcome to another SPY options update. This would be for week 27, which was a shorter week because Tuesday the market was closed, and Monday was a shorter trading session as well. So here are the results for Monday, and then on Wednesday, Thursday, and this was from yesterday, Friday. Just a few trades. So overall, the total premiums I received this week was $256. Another small gain, but it's going in the right direction. Meanwhile, the S&P 500, which is this purple line here, is down a little bit for the week. And we're more than halfway through the year. And so far, I think things are looking pretty good. Now, what about the SPY going into next week, which will be a full week ending on Friday, July 14th, which is this line here. Now, if I turn on the moving averages, you can see the 9 EMA is starting to curl down, but the 21 blue EMA is still heading up. So in the medium term, I'm still kind of bullish on the market, but short term, I am more bearish. And one reason is because the shorter term timescale, that green line, is heading downwards. Another reason is because this doji left on Friday has a giant wick, as you can see, going down like this, which means the market tried to push higher, but by the end of the day, it closed pretty much back at where it started, and even a little bit lower because that candle is red. And then the last reason is because if you look at the RSI, Relative Strength Index, it's forming a divergence with the stock market. So on the daily chart from June 15th, which was the previous high, to the most recent high that we had, you can see the market has been sort of going up, but the RSI, if we mark the peak to peak, it's going down. So this divergence signals that it's likely that the market will follow the RSI and go down, because usually what happens is you would expect the RSI and the stock market to move sort of together. For example, we have a peak here on the RSI to here. It's forming a higher high, and in the stock market, it formed a higher high. So that makes sense, as opposed to the divergence that we just saw over the last couple of weeks. And we can look at previous cases of divergences. So for most of this year, it was pretty much okay. The stock market and the RSI, the relationship has been going in the same direction. But over here, back in December of last year, you can see the stock market formed a higher high over here, but the RSI formed a lower high. So that is a divergence, and what happened after was the stock market fell following the direction of the RSI. And of course, the opposite can be true as well. For example, here the market went from a higher low to a lower low. But when we look at the RSI, it went from a lower low to a higher low. You can see the green lines I just drew. They are going in opposite directions. So this RSI is showing strength, whereas the stock market is showing weakness. And in most cases, the stock market is going to follow the direction of the RSI and head up, and that's what happens. So obviously, it doesn't guarantee that a divergence will result in the stock market going in the way of the RSI, but in most cases throughout history, that seems to be what happens. So we'll have to see if this plays out the same way, this divergence in the RSI and the stock market. I would expect the market to come back down and test 131, which is this level over here, before either bouncing back up or continuing to head lower. So that's something to keep in mind for next week. Thanks a lot for watching. Good luck with your investments, and until next time.